Welcome to the second half of the RagingFX's Forex trading course, week number 10. If you'd like more information about this course, please visit us at RagingFX.com. Today we'll be covering the first of three key technical indicators used by our in-house trading desk. This segment is titled Fibonacci Retracement Levels Made Easy Using MT4. By made easy, we mean that we will show you exactly what you should do with this indicator for your MT4 desktop. Okay, we're going to begin with the euro dollar. And one of the things we want to emphasize is that the Fibonacci levels really have a lot of ways to be interpreted. We have one way of interpreting it that we have found to be most reliable, and we'll share that with you. So the first thing you do is you select the D1 candles. That means that every single one of these candles represents 1 day of trading. We're looking at the euro dollar. The current price as we're speaking now is 1.2353. Okay, the next step we do is that we go up here to where we have the plus sign and the minus sign. We're going to compress the time frame as far as we can by hitting the minus sign until it just won't go any further. So you can see here, this is showing from 2012 all the way to 2018. You might say, gee, that seems like a long time, but this is the most reliable way to use this particular indicator. This next thing you do is to actually bring out the indicator. It's called Fibonacci. So you go to Insert, and from there choose Fibonacci, and then Retracement. That's it. Just click on Retracement. Then bring the mouse pointer to the candle that is highest in this particular case. So that would be right here, and we're going to click on there and then drag this down to the lowest candle on the screen, and that would be all the way down here. Okay, then let go, and there we go, we have our levels. Now what do we do with these levels? Well, once we've set this up from this from this point, from this time frame, we can now go back to our time frame that we were at before. All these levels will stay the same, and you can see some really interesting patterns here. So if I go back to where we were, that was right here, you'll see that the level 38.2 actually is acting as an excellent support. No coincidence here, by the way, because one of the things about Fibonacci is it's an interesting theory, and the only reason it really works is because everyone uses it, and especially the algorithms use it. So by knowing this and by following the herd in this particular case, it actually is effective. So the 38.2 here, as you can see, has acted as a very strong support. You can see that the 50 line, which was the halfway point line. By the way, just so you know where these lines are coming from again, let's go back. This was the 38.2, this is the 50. All it means is that I'm using, where the highest point was, so the lowest point is 100%. This is the 23.6%. This is 38.2%. This is part of the Fibonacci theory. Probably, if you want to think it, understand it in a very simplistic way, it's almost like dropping a ball from up here, gravity taking its role. It falls down to the ground here, and then as it bounces back up, it doesn't go all the way up, it only goes up to this point here, which is 61.8, and then when it bounces back down again, it might come up to the 50, and so on and so forth. And that's a little bit the same as the way trading works. I mean, it's a bit of an exaggeration, but I think it's a good explanation, simplistic one. So let's go back to where we were, and you can see that the support line, so these levels actually are good levels, they're reliable levels, and we picked them off from the furthest point. That's the important thing to remember. And you can see here that it breaks through the 50, where the 50 would have been a resistance, instead it became a support. And look what a great support it is right here. So you can see that what's going to happen next most likely is that it will remain above the 50. The 50 will act as a resistance, and it may actually try to test the 61.8 and so forth. So that's how to use these levels. Let's try another one just to kind of emphasize the idea. We'll go to Kiwi. This is the Kiwi dollar. Again, we're just looking at the D1. We go to the minus sign, max it out. Okay, you can see here at the top, this is my highest point and this is my lowest point. So I just go over here to insert, pick up Fibonacci Retracement, click at the very top, drag it down, grab the very lowest candle. Doesn't matter if it's an outlier. It's got to be the lowest one, and then I can go back, hit the plus sign a couple of times, so I'm back to a more current time period, and then you can see how these levels have actually acted. Look how it's bounced off of this 38.2. That's no coincidence. Look how it bounced here off the 38.2. How it bounced off of this resistance at the 50. This is not coincidence. Yeah, it didn't hit it exactly. That is something about Fibonacci, but again, that's, the science of the Forex is not a exact science all the time. But this is pretty close when you look at this. So the activity, you might say, the reversal activity is going to take place around either the support or the resistance lines, in essence, how you should look at it. And we'll do one more. This is gold with the dollar. Same idea. I just hit the minus sign, maximize it out. You can see this is extremely range driven type situation. Here what I'll do the exact same thing. Despite all this noise, I just pick the highest point and the lowest point. Those are the two that I'm most interested in. Hit insert, hit Fibonacci, hit the retracement, go to the highest point, go to the lowest point, and I have my levels. And look how these levels have been held so well even in this range trading. Look how many times it bounces off the support or the resistance in an uncanny way, and that's partly due because of the way the algorithms are written. You can see up here, even today at 61.8, most likely it's a good chance that it will bounce off of the 61.8 resistance and then come back down. And even if it cuts through it, you just set up your trading strategy accordingly. But these levels are the levels that you can use reliably. I would not trade 100% of Fibonacci. No trader will ever tell you to use the same one indicator as your trading guide. However, it is one more piece of the puzzle, and this is the way to use Fibonacci correctly. There are many other YouTubes out there that will tell you, otherwise. A lot of people will actually go in to the actual segment, and they'll take this as the high point and this is the low point, and they'll show you how the Fibonacci applies and so forth. You can knock yourself out with this Fibonacci to the point of paralysis. What we're showing you is what a professional trading desk does. This is as far as we take the Fibonacci. This is where we can say to you with confidence, these are reliable levels, they work, and we use them, obviously as part of the analysis. Anything outside of that, then you're really looking at a binary decision that could go either way, so you look like a genius half the time. That's not the best way to trade. So what we try to do is find things that have higher levels of probability of success, and we feel this is the way to do it. So hopefully this video has been helpful to you. If you're interested in our online Forex course, you can find more information at RagingFX.com. We are algorithm driven. We've integrated it into an online course. It's a very fascinating, very easy to follow type course where you're sent signals and taught how to use those signals and trade them effectively. And this is part of that course. So thank you so much. If you have any questions, reach out to us at RagingFX.com and click on Contact Us. Thank you.